Hello and welcome to the CFO Weekly Newsletter. Thank you very much for joining me. Well, right now we are at a very interesting point in the market. Reason being that we're about to enter into a new opening range, and we will talk about that in a moment. The opening range gives us the indication as to whether the overall market is likely to be bullish, neutral, or bearish. So we will discuss that in one moment. First place we want to start is by looking at the overall market on our workspace setup here. Now, we can see right now that all of the major indexes are above the 21 EMA, which is our line in the sand between bullish and bearish on a daily chart. The Russell 2000 has just recaptured the 21 EMA. We know that there was an inverse head and shoulders here on the Nasdaq, which I mentioned right here last week. We've had a very nice move up since then. I was bullish last week, and I spoke about that with that very unusual signal that told us that stocks were likely to move higher when we looked at the commodity channel index on a quarterly chart with the SPX. And we have moved up, right? We have been moving up strongly. Our opening range, which we should probably just look at now, this is something that we look at on the first trading day of the month, which is right here, and then also on the third Friday of the month, monthly options expiration, which is tomorrow. So we will get a new opening range set after tomorrow's trading has finished, and then we will be able to see on Monday next week whether the markets are going to be bullish again, neutral, or bearish. It is over 90% accurate. So this is something that we want to be watching and looking for. So we've got a new opening range coming up. We don't want to be too aggressive with any new positions right now. We have just officially entered earnings season as of today. There were a couple of companies that reported earnings yesterday, but officially the earnings season started today. Now, opening range, you can see here, I set the high and the low of the first trading day of the month. We broke above that. I spoke about this right here on this doji candle here, and then we continued to move higher. So we are in bullish opening range mode. I gave you the signal saying, look, we're likely to move higher, and that's exactly what we've done. Now, the Nasdaq is moving up again. It was down last night, but, just a bit of a pullback there. Now, if we measured from the neckline, right, from the neckline down to the bottom of the head here, and then we project that from where it broke out, which is obviously the neckline, to where it is likely to move, around 14,353 or 14,350, somewhere around there. So what does that mean? That means according to that pattern, we could continue to move higher in technology-based companies. I think some of the reason why the tech index or sector did move down, mainly due to Coinbase, right? Coinbase opened up quite strong and then did sell off, and I think that did trigger a selling campaign, and that did affect the Nasdaq in particular. So I think with that out the way now, it's really the next focus is going to be earnings, right? No doubt about that. The Russell 2000, we have a very nice double bottom or a W pattern here. Same thing. I'll just draw that for you. Okay, you can see that there. So this is something that is obviously bullish. Okay, we have now started to move up. Okay, a bit of sideways consolidation here. This could be flagging, right? Could be forming some sort of a bull flag now that we've sort of broken up above the 21 as of yesterday. So it'll be interesting to see whether that continues to move up. But that is a bullish pattern off a pretty decent level of support around there. So that looks okay at this point. Nasdaq we've already spoken about. The SPX already in bullish opening range, and I mentioned the reasons for that. When we look at the Dow Jones Industrial Average, that's still moving up strongly. Nothing there would indicate any bearishness at all at this point. Got to trade what we see and not what we think. We know that eventually there is going to be a very sharp pullback. Okay, now I have got positions set up that are expiring in June. I think we're going to see a bit more of a move up from here before a good size pullback. 10, 20, 30% or more. That is not trying to promote fear. That's very normal. You go back and look at the stock market at any point in history and you will see, 30, 40, even 50% pullbacks are not uncommon. And certainly we are due for one of those. So, to have some hedges in your account right now, to be a little bit conservative until we get a new opening range next Monday, get some clear direction, and also get a few more of these large technology-based companies that have such a big weighting in the market. Let them come out and report some of their earnings as well, so we start to get more of a clear direction. Now, JP Morgan did report earnings. They actually moved down over 1.8%. We saw Wells Fargo. They reported earnings as well. They had a strong move to the upside, over 5.5%. And then Goldman Sachs reported earnings, and they were up just over 2%. So it's going to be interesting to see, the large companies we're talking about here. So we're talking about, very soon in the next couple of weeks, companies like Google, nice bull flag there. Google reporting their earnings. Obviously, Facebook will be another one of those reporting their earnings. Has pulled back recently. See whether that 300 level holds. And Apple is another one here that will be reporting its earnings soon. So a lot of very large companies reporting their earnings soon. And if we do get very positive results here, and not just positive earnings results, because you got to remember they're reporting two things. They're reporting the earnings per share and the revenue. Okay, and they're going to compare the actual earnings per share and actual revenue compared to what the analysts expected those two numbers to be. If it's much higher, the stock will move up significantly. If it's much lower, the actual earnings compared to what the analysts expected, we'll see the markets, or that stock, should I say, move down. If it's reports in line, as they would say, it won't do much of anything. So we want to see whether these big companies are going to be reporting better than expected earnings, but then also, very importantly, their earnings forecast. Okay, this is what you did for the last 3 months. That's well and good, but the market's always forward-looking. So we're going to be very interested to see what they are focusing on for the next 3 months, right? Do they think they're going to do better than what they've just done? Are they going to pull back significantly? What's going on? What do they say as a company regarding their earnings for the next 3 months looking forward? That's probably going to be more important even than the earnings that have just occurred. So a lot of focus now is on earnings. We saw Jerome Powell speaking yesterday. And, obviously, whenever he speaks, that is something that the market pays attention to, but really they're more focused on earnings, right? He was saying the same old thing, right? We're going to support the market as long as we need to, whatever we've got to do to keep things going. They're being, they're going to pull out all the stops to really look after they're saying the markets for as long as they need to until the economy stabilizes again, which could be quite some time. There is no way that they're going to raise rates anytime soon. Okay, they can't afford to do that. If they do raise rates, that is going to be a big problem for the market. So, same old thing really, and people are more focused on earnings right now. Now, we've got retail sales coming up, okay, manufacturing index, industrial production. They are certainly some things here that can move the market. Consumer sentiment tomorrow, and housing starts and permits. So there is a fair bit of news coming out that can move the markets over the next couple of days. But really, from my point of view, it's mainly going to be focusing in on earnings, and the company's forecast for the next 3 months will be absolutely critical. Now, as far as what some of the stocks that we are looking at going forward, we will show you just a couple of those soon. The skew, the perceived risk of a market crash, that's back up over 135. So this is very bearish right now. To have positions like we have right now that are set up for, if the market was to have a significant pullback, we would make a lot of money. I think that makes a lot of sense, right? It makes a lot of sense with some of the positions that we have on now, right? To be able to hedge those, and also to be able to make a lot of money as well, if and when the markets pull back. The combined put-call ratio. Now, if we look at the 10-day moving average, anything that is below 0.75. We can see right now that's at 0.73. So this shows excessive call buying. right? Little bit of an insanity point in the market. And normally at those insanity points in the market is when you get turning points. And, certainly the skew and the combined put call ratio are telling us that things are, well, could potentially be very bearish. So we've got to keep that in mind as well. And, if you start to get some of these companies coming out and saying, look, our forecasted earnings for the next 3 months is really not going to be that positive, that's going to have a big impact on the market, and we could see things move down very quickly. So really what I'm saying right now is anything could happen over the next couple of weeks. We're at all-time highs. We're severely overvalued, okay? The Warren Buffett indicator, where we compare the total market cap of the stock market compared to GDP, that is at around 224 right now. Anything more than 115% is significantly overvalued. So right now, to actually go back to a daily chart, so to have that at 224 right now is showing severely overvalued. PE ratios as an average are through the roof as well. Doesn't mean we can't go higher though. And remember, there's record margin debt, like I showed you last week, coming into the markets. In the last 12 months, there's been an additional $334 billion of market debt that has come into stocks, which simply means people are borrowing money to buy stocks. That is going to cause stocks to continue to move up. But there's, again, you've got to keep this in mind. Someone was saying to me the other day, well, Sean, I think the market's too strong to move down. Why have you got those hedges in your account right now? Well, again, you want to be prepared for it because you never know what's going to happen next. We're not delusional to thinking we understand what's going to happen next. And, before the markets fell prior to the pandemic, they were very strong as well. Right? So the markets are always looking strong before they have a big move down like this. And you normally do see a very strong move higher before markets, correct or have a crash. And, that's certainly not a reason not to put on a hedge because things look really strong right now. But for us right now, I think a combination of being conservatively bullish with really good setups, because 85% of stocks move with the market, which means what? 15% don't. So there are always opportunities in the market, okay? Normally what we try and do is actually be in unison with the market, right? Pick one of those 85% that are actually moving in the same direction. But there are always directions and always setups, should I say, and always opportunities. And you need to be very particular about the setups that you take. Now, one of the ones that we were looking at before was Caterpillar. So if you have a look at Caterpillar, that's obviously in a very strong uptrend here, been utilizing the 50-day moving average and then using the 21-day moving average there. But some of the reasons why we got into this, if you have a look at one of our setups that we use, and it's this one here, it's called the squeeze. Now, the squeeze, what we saw here was a very nice monthly squeeze. Okay, now the higher the time frame, the more powerful that squeeze will be. So this is a monthly chart, so that's obviously more powerful than a weekly chart. A weekly squeeze is more powerful than a daily, and so on. So this one on a monthly chart was very, very powerful. So it broke out here, okay? So we can see that the upper Bollinger Band and the lower Bollinger Bands both breaking out at the same time, okay? So this only happens around 20% of the time. And when it does, what it normally indicates is a strong or bigger than expected directional move is about to occur, okay? So the upper Bollinger Band and lower Bollinger Band have broken outside of the Keltner channel, okay, which is these purple lines. The 12-period momentum is pointing up and above 100. You are buying call options. This stock triggered here when it was around 182. It is sitting now at 235. So that's obviously been a very, very nice trade. So, Sean, that's in the past, and that's something that you're already in, lucky you. But what's something now that I could look at? Well, have a look at this one, ORCL, Oracle. What do we notice here on the monthly chart? Well, you guessed it. That is a very nice looking monthly squeeze. Don't say I don't give you great content. Have a look at this. Beautiful breakout here and here as well. So it has broken out of the squeeze, okay? Now, the way to think of the squeeze is think of a slippery fruit pip in between your fingers, okay? You keep squeezing that slippery fruit pip and it eventually comes squirting out, doesn't it? Either to the upside or the downside. Exactly the same with a squeeze. It's been consolidating, building up energy, and it's going to release that energy. Now, again, this only happens 20% of the time. So this is now released now on a long time frame chart, which is the monthly. I would like to take a long-term position in Oracle. Now, there's many different ways that I can set up a long-term bullish position in Oracle. What I want to be able to do, and this is something I'm about to do for my members right now, is to set up a position where I have a long-term position, okay, that will benefit with options as the stock continues to grind higher, okay? And then I want to have short-term cash flow strategies that are making money even if the stock stays the same price. This is the power and versatility of options, and it's something that once you understand it, you will never trade another investment vehicle again. I'm not interested in stocks, futures, forex, any of that, because options are by far the most flexible, transparent market in the world, hands down. Now, how long would this last, Sean, this squeeze that you're talking about here? Well, normally 8 to 10 candlesticks. Okay, so what does that mean? That means it's triggered here. Sean, how do I know it's triggered? Well, the Bollinger Bands were inside the Keltner channels. Okay, the yellow lines are inside the purple, if you like it like that. They've now broken out, so it's triggered right here. Once it's triggered, it will last 8 to 10 candlesticks. Now, we've located this or identified this squeeze on a monthly chart. So this will last 8 to 10 months. If you identified the squeeze on an hourly chart, 8 to 10 hours. On a daily chart, 8 to 10 days. So this one will normally could last 8 to 10 months. Okay, so we're 1 month in. This is our second month now that we're in. We're only halfway through this month of April. Okay, so this is something that I'm going to set up a position in long term and cash flow at short term. And I think, like we did here, should do very nicely. Now, the reason that you probably wouldn't get into Caterpillar is we've had 1, 2, 3, 4, 5. This is our 5th month. So there is a couple more months still left in Caterpillar. This is definitely a position that you could look at as well. Okay. Not as longer term because it's, 4.5 of the 8 months have already played themselves out very nicely, mind you. There could be something there as well. So, that's a couple of positions that we're looking at right now. And we are very focused on earnings, waiting for our new opening range. Once that's happened, then we will start looking more aggressively at some particular setups. But right now, that is where we're at now. One other one that we did very well with just recently was Nvidia, not based on a squeeze, but Nvidia, we did very nicely on this one. What we did is we set up a beautiful spread on this. Okay, we just did a call debit spread. We bought a call debit spread. I sold the 560 and bought the 555. Okay. This one worked out beautifully. Okay, made about 95% return on my risk in a week. So as you can see, beautiful move to the upside. We've gone from when we entered, which was right here, right on this candle right there. We entered on that red candle right there. Okay, we entered on that day. We've gone from 554 to 611. So it would have been nice to have some straight directional calls on that as well, but we did have a nice call debit spread on that, and we've done very, very nicely. So we'll close that one out as well. Take our almost our maximum profit on that one. That one's done very, very nicely. So that's really all I've got for you right now. Let's see what the opening range is on Friday, and let's see how the price action plays out on Monday. Let's let a couple more of these larger companies report their earnings. You've got to be patient. Be patient, be objective about where the markets are right now, and let's see what the market wants to tell us. Again, we're not in charge. The market's in charge. The opening range is going to dictate where we move to, And once that's given us more of a clear direction, then we can start looking at some additional positions. But in the meantime, a position on Oracle and maybe some sort of position on Caterpillar there as well. And that's how I can help you out right now, my friends. Let me know if you enjoyed that newsletter, and if you want me to continue to do these. I've had some pretty good feedback so far regarding the CFO Weekly newsletter, and I love getting the feedback. Motivates me to continue to do this, and let me know if you enjoyed it. All right, my friends, I will talk to you again next week. A few things to look out for this week: earnings, opening range, a whole range of things that are going to give us some clear direction. Should be exciting to sit back and have a look at these. Now, we will talk to you again probably Tuesday or Wednesday of next week. Thank you very much for being here. My name's Sean Allison. All the best, and bye for now.